So hello active traders and welcome to our Trading Week Ahead broadcast. I'm Ken Calhoun from TradeMastery.com coming at you live here on Saturday, February 5th, 2022. Now what an S&P roller coaster we've had lately, right? Earnings season is mostly gone, so we're done with earnings. Our NFP was out yesterday, Friday, and you can see we had a kind of a mixed reaction to the different earnings and the rest of it. Speaking of patterns, and I mentioned that in our Jazz broadcast a few minutes ago, notice that the whole real bodies of the candles of the S&P were getting smaller, progressively smaller, right before the rollover. That's a pattern that you should, as a swing trader, you should be intimately familiar with, and that helps hopefully keep you out of trouble or false breakouts. Look at the daily candlestick chart. What you do is step one. Look at the daily candles for the last week before your trade and see the height of the candles and the color. You know, if they're slowly increasing, holding the same and then increasing in trend and range, that's good for an entry. But if, like the S&P, the candles are getting smaller and smaller, that means, like my colleague Steve Nissen would correctly say, the bull's running out of steam, right? And be sure you learn candles exclusively from my colleague Steve Nissen at candlecharts.com, because what he teaches works. Anyway, that's one thing that I learned from Steve is I look for those kind of patterns. If you see whole real bodies that are getting smaller, that means the bulls are kind of running out of the steam. And you can see here, the resistance is right at the 100 simple moving average line. Now that's one way to combine candles with Western technicals is look at your moving averages or previous horizontal support or resistance and trading ranges to see if you're getting close to an exhaustion area and stay away from that and get in on breakouts that are likely to continue. Anyway, moving forward, I would use 40 right here. I would use the obvious. I'd use the 200 and the 50 SMAs as key support and resistance. We're currently inside that channel. Price action 44.50 is S1, obvious support. Every street trader in the world will tell you that. And obvious resistance is up here right near the 46.20 on the 50 SMA on the upside. So a long bias market if we're able to climb up at least over the 100, but preferably over the 50. And a short bias if we lose the 44.50. The next indicator to look at is the Volatility Index, also known as the SIBO VIX, and you can see our VIX down just a little bit yesterday, but it's still elevated. The VIX over 20, you can see here. The VIX closing right near the 50 SMA, near the 22. But look at the big surge in volatility, despite it was a shooting star right here. And the volatility dropped, and then it pivoted a little bit. But anywhere, as long as the VIX stays over 22, it touched right under it. It closed above it near the 23. Where'd the VIX close? 23, 22. Anyway, as long as the VIX stays north of 22, that's kind of the line in the sand for a bearish market. So probably not a good idea to swing trade to the long side unless the VIX gets and stays at least under the 22 and preferably down here under the 1920 region. So I want you to keep an eye on the VIX as well as the S&P moving forward. Now let's take a look at a few charts for swing trades and we'll see where things are headed. Trying to pull up our charts here for y'all. Oil has been especially strong. You can see our UCO long oil ETF way up at 120. I like to trade things like that are less expensive, but keeping an eye at least on your commodity ETFs can help give you a foundation for directional bias for the stocks that you're trading. So for example, Occidental Petroleum, which I really like. What's the problem though yesterday? Shooting star, right? That's a bearish reversal pattern. Despite it being green, it is a shooting star. So that says, don't buy me unless I get over 42.5 or 43, even better. But Oxy had a really nice run for the money. We had a bullish lower shadow down near the 26, 27, ran up for the last multiple weeks all the way up here to 42. So almost a big multi-point run. You can see Halliburton looks really good. Now I like this Halliburton chart better than the Oxy chart because we don't have a shooting star and it is a consolidation breakout. So again, not a trade recommendation, but I'd be looking for a long in Halliburton for a swing trade if we get over the whole number 33. So you can see this is a good example of a wide multi-point clean chart with good directional volatility. That means it's moving up consistently. So oil continues to be strong. Now some other ones that you folks had mentioned earlier, which are really good examples Last week, I believe somebody had mentioned this one, PBR. It's consolidating up here, but if it breaks to new highs, that looks like a good breakout. Here's another one, UAN. That's a little pricey for my taste, but it's a good chart nonetheless. ECPG, also a little pricey. I like things that are down in the $15, $20, $30 share range. That's my own personal preference. Your mileage might vary. A side note here on ECPG, Echo Charlie Papa Golf. Echo stop.
Here's something I found on
Echo stop. I have to not use the E word. Anyway, the point is, ECPG, we don't want to trade things with a $9 in them. So this, I would wait till it gets over 70 myself before swing trading, because we're getting close to the decade value. And often the multiple of 10 price points, like $50, $60, $70 a share and so forth, are often exit target regions for professional traders. So if you're in long from, say, 61, 62, you'd be happy to sell up here near 68, 69. So that may exert some sell pressure on this instrument later as well. Let me turn the volume up a little bit. Is the volume okay? Just doing it. And thanks, Amy. Yeah, Marathon I'm sure is good as well. On Kevin, the inverse VIX symbol is SVXY. S is in Sam VXY. So just checking, and yeah, good point from Bill on the S&P candles. And yeah, good point from Wendy about the market we've been in. Because the market has been so up and down, right? It's up one day, then down the next, and up one day. A talking head had mentioned that. It's probably a better market. At least I prefer to day trade this market than swing trade it, because the risk of overnight adverse gaps against you is really high right now because it's very unpredictable. So if you do trade swing trades, the tip is trade much smaller size than you normally would, because you want to minimize your risk. So that's important. Anyway, ECPG would go long over the 70. Now, Pelotron is a top pick for next week because Amazon expressed interest in buying it, and you can see aftermarket that skyrocketed the share price to 31 a share. You can see that in the upper right, that time and sales window here. You can see it was trading at 31, which is way up here. Pelotron may have a long ways to go to the upside. It wouldn't surprise me to see it gap up in the mid 30s or even high 30s come Monday morning. So I will trade it. I'm going to day trade it for sure. I don't know about swing trading it. I may do a small, again, as always, 50, 100 share initial starter pilot trade if it does take out new highs and continue up in session. But Pelotron is a top pick for next week. And all of you who are live room members can look forward to specific alerts and the rest of it that we'll be covering for this one, because Amazon expressed an interest in buying it. I don't know about you, but when Amazon says it wants to buy, and it used to be 120 a share, I could easily see this doubling up to 60, right? So for that reason, PTON would be a top pick for next week, because it got beaten way the heck down. This is one of my top picks for bottom fishing anyway, down here with the 30, and now that it traded up over 31, it's on my radar. So PTON, probably a good play for next week. A question from a trader, where would I get in PTN? Where would I get in? It depends on how it opens up on Monday, right? If it opens up at 35, I'd buy above that. If it all depends on where it opens. We have no idea where it's going to open. Until Monday morning, we'll see where the gap is. But aftermarket, it gapped to 31. Another pick for bottom fishing may be SPCE, Virgin Galactic. You can see it came down from 35, 36 a share, all the way down here to $9 a share. And it's starting to bounce here last week, Friday, Monday, Tuesday, it bounced a little bit. So a week ago, it started to bounce. I will be scaling into SPCE if it gets over 10 and holds there. So it's a relatively good bottom fishing. We don't want to play it yet, but if it bounces over 10, there's a lot of upside. And so that's a good indication. Now let's switch gears and look at some intraday charts. One of my favorites yesterday was KOLD I traded. Let me pull that up here for you. Now when you're day trading, One thing I like to do is, how to say, I always do the hit and run quick, 5 to 8 minute day trades with one triggers the other conditional orders. But I also like to put on more leisurely intraday trades. And that's what I did yesterday in this. You can start to buy first sign of a pivot, or if you want to wait for a breakout, that's fine too. Put on, maybe trade 1 on a pivot, trade 2 on a breakout, trade 3 on a continuation, and then get out at the end of the day. This pattern is one of my favorites, which is a 45-degree angle clean breakout. This is the Inverse Natural Gas Etf, and also a top pick for a breakout long next week. It had come from much higher as natural gas costs skyrocketed. Remember, my utility bill is $500 this month, of which $200 was natural gas, which is, I don't know, probably double or close to double what it normally is from what I remember. Anyway, if you also, I live in Colorado. If you live in a cold weather state, we got big natural gas bills. Anyway, natural gas price started to drop, and so this one skyrocketed, and there's a long way to go. So KULD has a good 45-degree angle breakout pattern, and that's one of my favorites from yesterday. The end of day VIX spike that I made a lot of money with trading 400 share blocks into the close was UVXY. And again, what I mentioned earlier in the broadcast here today was the fact that we had a repeated pattern. End of day spike in this, just like yesterday. Remember, I used to trade TVIX. Into the close, and it had as large as a 5 to 7 point range on especially volatile days. UVXY doesn't give you that kind of range, but still, 70-cent run, 80-cent run there was pretty good. So look for repeated patterns. One thing that I like to teach in my live room, and I encourage all of you to join if you have not done so already, at Trading the Open, you can see it's at trademastery.com/live, or you can still type in www.tradingtheopen.com, and that'll forward you over to this page. We like to cover patterns for both day and swing traders, so that way I answer questions. I run the room 5 days a week, Monday through Friday, from 8:30 in the morning till 11 in the morning, and from 3:30 to 4, so we can capitalize on these end-of-day spikes. And I walk traders through specific entries and exits for all these charts. That's one thing that you should be aware of, that unlike any other room in the world, I give specific triggers. And you can see, let me see if I can pull this up for you. Well, you've seen there's like an answer key in the upper right that has specific tickers and entry triggers, specific prices posted before they get there. So that way you have a game plan, a trading plan, if you will, so you can plan your trades and trade your plan daily. Let me show you what that looks like. So that's an example of the kind of the answer key approach I have. I've got both long and occasionally I'll put short triggers as well, but mostly long triggers for the daily watch list. So you get a daily focus list long before the opening bell. At 8:30 in the morning, we start talking about these charts and going over them as a team. And you can see exactly which tickers are of consideration. Like yesterday, we covered successfully Snapchat, Twitter, Facebook, and so many others. OxyPete was really good for our members, as was UVXY, etc. So that way you get, before the market even opens, a list, kind of a shopping list of stocks and ETFs and specific entries. And then in market, I go through exits, re-entries, answer trader questions, and the rest of it. So if you really want to learn how to day trade a good professional approach, you may want to try my live room at trademastery.com/live. Okay, back to our charts. Twitter was a good example of a gap continuation runner. It opened up at 36 and change. My long call, as you can see in the alerts table, is 36.20. Produced over a $1 move in that instrument. Ran up to 37.40 before pulling back to 37. So anyway, 36.20 was a good trigger for that. Snapchat, also a nice run. I called it long at 36.40 on the pivot. As you can see in the alerts table, right? Before it moved there, I said, let's go long if it gets over 36.40. You can see it ran all the way over 40. Ran over $4 for my alert. Now, I don't know about you, but if you got even a piece, half of the $4 win, that would have been a really big win for you guys. So Snapchat was a good win for us yesterday as well. Now pot stocks are up a lot, and one cheap, especially cheap one that I liked was Sundial, SNDL. Now I normally don't cover stocks under $3 or so a share because they're usually relatively dangerous, but when there's a lot of volume like this, doing as many as 1 million shares a minute, there's a lot of liquidity. So there's I don't call it a safety net, but there's less risk of big spreads or front-running chat rooms or whatnot. So anyway, Sundial, a really good play. Tilray and Canopy Growth also doing nicely yesterday. So the cannabis stocks, as well as our social media and oil stocks. Those are 3 sectors I want you to keep an eye on next week. The cannabis stocks, Sundial, Canopy Growth, CGC, and Tilray, TLRY. Pot stocks are up sharply. Oil is still running, so things like Halliburton, Marathon, Occidental Petroleum, all good plays for oil. And our social medias, especially Snapchat and Twitter, should all be on your watch list for next week as well. Another one that ran nicely is ANY. Another example of kind of a cheap stock. See, those are kind of haphazard though and random. I mean, it ran from 2.5 up to 330. I called along at 2.7, as you can see, and it ran all up to 340 at the top. So that was a pretty good run. But I don't know about y'all, but I prefer charts like this one that are a little more consistency. Now, I was trading Facebook successfully yesterday. Really good pivot off that 231. Long call on Facebook was 236. Now, my first short call was at, I think it was 235.40 or 234.40 pre-market. It ran all the way down to 232. In market, we called it long starting up at 236.40, and you can see it spiked all the way to 242 before the afternoon rollover. Now, again, with a stock like Facebook, you don't need to trade 1,000 shares or even 100 shares. You can trade, 10, 20, 30, 40 shares if you want. There's no limits on the size that you can trade, but really good up. Look at the range, 230 to 242, a $12 range in Facebook yesterday. So that's a good one to work on. Now, OxyPete, I called along, I think it was 41.6. Yeah, 41.6. And live, I told everyone to sell right under the 42, right near 42. I think it was 42.20 or 30. 42.20 was the exit call, right? So thanks. So yeah, it was a good run. This is a good example of why you need to trail stops. When something runs up, it doesn't do you much good if you buy 41.6 and hold on to it. It ends the day down at 41. Or if you buy 41.6, it runs up and then it comes back down and you sell it break even. I mean, that's fun, but it's more profitable if you buy at 41.6 and sell at 42. This is a good example of why I'm a big advocate of selling whole numbers. Whenever something gets near a whole number, like 42, this went right over the 42 up to the 42.20 or so, kind of a tweezer top up there, right? When something runs up to a whole number, that's a good place to tighten in your trailing stop because often it'll fade back right back down again, make like a letter A or a tent, right? It runs up and it comes back down. So when you're in the money, that feels great. You feel like you're on top of the world and it's going to run forever until it doesn't, right? So one thing I've learned over my many years, over 2 decades of full-time trading, is trailing stops, whether you're using automated trailing stops or manually. I prefer to manually tighten my trailing stops. It can lock in a gain for you. So that's another pattern to look for. When you get in on a breakout, that's great, but the further it runs up, the less likely it is to continue running up. So you want to at least bring your trailing stop into break even or slightly higher to lock in a gain. And if it runs up to a whole number, you tighten up to the 0.8 or the 0.9 right under the whole number. So that's a good reversal pattern. Now, big picture, despite the midday reversal in the S&P yesterday, what's the immediate trend of the market? It's still in a slight downtrend. It's not a strong downtrend, but the S&P on a 2-day chart is another key indicator to look at. I always want you to pay attention to the 2-day chart. Let's see, a question from John. Let's see. What's the difference between my live room and my educational videos? Well, a huge difference, right? The educational videos were recorded years ago. The live room is live in the stock market every day. We meet like this in Zoom, so you get live real-time alerts and entries and exits and answering questions. So that's the centerpiece of my company. I have so many traders members and a lot of new members that joined lately. So my live room gives you step-by-step walkthroughs of live alerts in market. Educational videos are a good place to look at for maybe historical training that I've done in the past to get you up to speed on some of the patterns, the concepts, the strategies, but you put it to work in the live room with live market training and alerts every day. So that's the obviously the big difference. And yeah, the live room has been so popular, and thanks to all of you for joining. We have so many new members have joined lately. It's good to see the room explode. So that's great to see the alerts. Really, to outthink the market, you've got to be focused purely on price action. And a big piece of that is risk management and trading ranges. And what I call tradability, is something, the cleaner and the wider the chart is, like the KOLD yesterday. Right? The more tradable it is because the more consistent it is. You can scale into it, every 50 cents or $1 or so and potentially do very well. The opposite of that is choppy, narrow range charts that are very difficult and dangerous to trade. So one thing that I like to teach traders in the live room is the difference between those, and you can see it reflected in our watch list each day. I told traders, and by the way, the best tickers are the ones at the top of the answer key that you'll see in the live room Monday through Friday. And of course they change every single day. Friday, Snapchat and Twitter were my two favorites, right? And that's why they're at the top. And cold and UVXY and SQs and whatnot for the ETF. So a lot of traders. Let's see. Hey, Steven, thanks, man. On SPXU, it's less than UVXY. Yeah, I was trading SPXU a lot in January. I still trade it. I was trading it yesterday, too. My three favorite inverses, though, are UVXY. I'm looking at one of my monitors up here. UVXY, TZA, and SQQQ. Second place award goes to things like SPXU, is also really tradable for shorting and SDOW, SDOW. So if you want to short the S&P, you trade SPXU. If you want to short the Dow, you trade SDOW. But again, I give preference to charts that have bigger ranges. Now for long bias charts, and again, this one did a nice end-of-day spike as well. For long bias, when the market goes up, I like SOXL, the semiconductor leverage long. And see it did a nice run here from just under 41 up to 44. So multi-point range. For next week, though, I really like KOLD. That's that one. If the market sells off, obviously we like UVXY and SQs and TZA. And also the social media stocks like Facebook, Twitter, and Snapchat. Our cannabis stocks like Tilray, Canopy Growth, and Sundial. And our oil service stocks like Occidental Petroleum and Halliburton and Marathon MRO. So good stuff. A question from William, opinion on Bitcoin, is upturn sustainable? No, we're in a very choppy market. Now is a terrible time to trade Bitcoin because the market is so up and down. Bitcoin is too. Now I like to cover Marathon, M-A-R-A is my favorite Bitcoin stock. We also cover Riot on occasion. I know one of my traders likes Riot, but I like M-A-R-A is a good one. Hi, Wendy, that's right, Consolidated Foods. Well, for members, I'll pull it up in the room. But yeah, I don't have time for picks today. But I do like some of these charts. So KOLD is good. One thing I'll leave you, again with kind of a parting thought is when you look for swing trades, it's really important to look for two-day high breakouts, right? So for example, one that we'll cover especially well is PTON. Pelotron. You can see it looks like a pretty unimpressive chart on the 2-day until you look at the tape. Remember, this is the one that Amazon made a rumor that Amazon's interested in Pelotron, and that gave it a $5.50, almost $6 aftermarket pop all the way up to 31. So that'll obviously be a big gap up. I don't know where it'll gap on Monday. It closed the day aftermarket up at 31. It may gap up high in the mid to high 30s or back down to the mid 20s. But do keep an eye on PTON next week as well. Anyway, I'm going to wrap it up here, gang. Thanks for being here. I do appreciate it. We've got lots of charts to work with, and I hope that I've earned your confidence and your trust. You may want to join my live room again to get more coverage in live markets. I always like to take a thinking approach to active trades, much like trying to have fun with my jazz, playing both kind of patterns that repeat that I'm comfortable with, as well as improv. In trading, you really want to focus mainly on patterns that repeat and look for the charts that are worth trading. So that's what we covered to work on. Hey, you're welcome. Thanks, everyone. Yeah, a good point from Stephen about all governments are attacking Bitcoin. I don't like Bitcoin. I like Marathon. MARA is a tradable Bitcoin stock, but I personally wouldn't be buying BTC or Ethereum or any of the others, because with all the China, Russia, and other governments not liking Bitcoin, I think it's a hazardous thing to trade. So personally, I have no interest in trading Bitcoin whatsoever. I prefer stock and ETF charts that I know how to trade, that I've been trading for years. So anyway, thanks to all of you for being here. I appreciate it. Trade smart, and hopefully let's go get them. Again, join my live room. At least give it a try. I got an inexpensive trial membership you can try out for a couple of weeks and see what you think. We meet in Zoom, and I give step-by-step walkthroughs on top charts and, more importantly, or equally importantly, specific entry triggers to work with as well. All right, well, take care and trade smart next week. See you guys next time. Bye for now. Let's stop this thing. All right. Well, do well in your trades, and I'll see you guys next week. Bye for now.